Hi, this is Mike Swanson of WallStreetWindow.com. This is the stock market crash alert for January the 10th, 2012. What are the risks of a crash? On a scale of 1 to 10, I put them at 6. Let me explain why. First of all, the U.S. stock markets are still in a sideways trend. They basically went sideways last year, closing just about almost exactly even. At the same time, emerging markets in Europe are both locked in vicious bear markets. This is being driven by the looming European debt crisis, which has not reached a resolution and will likely do so by the summer and result in a dangerous situation for global markets, where we'll likely see them reach a crescendo, a final bottom of selling, which will likely drag down the U.S. stock market for a period of time. Now, you combine these things with the dangers of program trading. In 2010, in July, we saw the Dow fall about 10% in a single trading session and then come back in the same day, all due to program trading, with hedge funds and institutional investors dominating this market, many of them using computerized trading programs to try to profit from this market. The risk of program trading cannot be understated. So, I analyze the stock market using trend stage analysis. Markets go through 4 stages. They go sideways after a bear market, they go through bull markets, they go through stage 3 topping process, and they go through stage 4 vicious bear markets. If you take a look at the S&P 500, it's gone sideways for a year now, and it's locked in what appears to be a stage 3 topping process. Since October, it has been going up, but it hasn't broken through resistance. And even if it does, which is a 1300 level, which I hope it will do, it still will be in a sideways trend. And that's not a bull market type situation. At the same time, the world markets are locked in vicious bear markets, making lower lows and declining in vastly underperforming the U.S. stock market. And this situation is likely to continue until we see the final bottom occur, which will probably happen and be triggered by a resolution to the European debt crisis, which could mean Greek defaulting, Italy defaulting, Spain defaulting. It's just a matter of how ugly is it going to be. So what's that mean for you? It means it's time for prudent decision making, and that's critical in this type of market. This isn't a time for making big risks that don't result in the potential for big gains for you. You want to do the opposite. You want to risk very little in this market to try to make a whole lot. So enter in your email on the right sidebar, and I'll show you how I do that through what I call the twofold formula of picking stocks and how I analyze the markets and trends in greater detail. And I'll also send you any updates to my stance on the odds of a market crash happening. If the situation gets more dire, I'll certainly alert you and you'll know about it. So enter in your email on the right sidebar right there. It's absolutely free. I won't share your email address with anyone else, and I'll be talking to you later.